Hey, welcome back to Midas Letter Live. My guest in this segment is John Fowler. He's the CEO of the Supreme Cannabis Company. John, thanks for joining me again.
As always, happy to be here.
John, I saw you on the stage of Moses Neimer's Ideacity recently, and I was interested to hear how that went for you.
It was great. So we were invited to speak at the Ideacity event and wanted to bring, I think, a unique perspective on legalization. And the whole point of the talk was legalization as a political event, hugely successful. October 17th stores will open, but unless the industry does better to produce the quality of products that consumers want, as a consumer change and as a long-term event, legalization risks failure.
How could it possibly fail?
Well, if you use an analogy, in Canada we essentially have a legal alcohol shortage. So picture, in all the LCBO shelves, nothing in there.
Found a shortage.
As an industry, we're primarily responding with low end goods, so essentially the malt liquor of the alcohol world. And I think, like alcohol, we need a range of products because there's a range of consumers.
Right.
Our target consumer, we call the cannabis enthusiast, not only is a heavy use consumer consuming weekly or more, they're spending far more than the average per month on cannabis, but they're also spending a lot per gram on cannabis because, quite frankly, they want the good stuff.
And they like to be high all the time.
Something like that.
Interesting. Recently, you had announced that you have a supply agreement with Manitoba Liquor Corporation, which I found intriguing because my understanding was that you were always going to be a wholesaler to other brands, but now you're more of a branded consumer-facing product yourself.
So to date, we've always wanted to be one step away from retail. We think retail, whether it's online with medical or brick and mortar for recreational, is a challenging business. It's a business that few are successful at, and it's not where expertise lies. We believe we can make a great brand around our proprietary flower. We can make a great brand around our downstream products from that flower, and we can work with great retailers. So retailers in the great province of Manitoba and elsewhere nationwide as we continue to succeed with listings.
Okay, so is this product going to be branded as Manitoba Liquor Store Marijuana, or is it going to be branded Supreme?
No, this will be 7 Acres. So that's our
7
consumer
Acres,
brand, our entity out in Kincardine. So when you walk in, you'll see a beautiful table like this. Sniff jars, generally across the country, so it allows our aroma. We think some of the best smelling cannabis in the market to entice the consumer right away. They can smell, they can look, they can purchase, and when they take home, they're going to take home a 7 Acres branded container.
Sure. Wow, that sounds fantastic. So the rollout of the rules, October 17th, 2018, is that you mentioned earlier before the segment started, that was more or less what you were expecting to happen?
Yeah, so I think it's easy to underestimate the complexity of doing what Canada is doing. As the first G7 country to legalize and create a national market, 10 provinces playing in that market, there's a lot of laws that need to be passed and regulations. If you think federal, provincial, and municipal, there's businesses that need to be open. So I think October gives the industry enough time to get ready and put our best foot forward as we launch to 4 or more million Canadian consumers come October 17th.
Okay. Your strategy going forward, I'm going to refer to the chart here because of all of the ACMPR earliest ones, probably Supreme Pharmaceutical is one of the few ones who has not yet sort of soared into the billion-dollar capitalization range. One might argue that this represents an opportunity for investors because the market hasn't properly valued the company. Others might argue that this is the valuation you deserve. What would you say to that?
Obviously, we're looking at the former on that. For us, I think we've been successful on a number of fronts. Our initial business plan was to launch 7 Acres as a premium brand for high-quality flower. We succeeded in that. I would put our team and our facility on par with any grow I've been to, whether that's in the United States, Europe, or elsewhere in Canada. We validated the value of our brand through preferential pricing. So our wholesale pricing has been $6 or more, and we're very excited when we're in a position to announce what our recreational pricing is going to be. All that ties into 7 Acres, I believe, is one of Canada's leading brands today. As we move forward, I think that where we'll be excited to unveil our strategy is how we're looking at proprietary products, flower being the first one, but then looking at concentrates and other downstream products as well.
Okay. What are the big catalysts in 2018 besides the obvious October 17th that are going to be representative of adding shareholder value to the whole value proposition?
So I think the big one is scale. I think scale is a big risk in this industry. All licensed producers are moving very quickly on this front. I think we're doing a better job than most maintaining our quality as we scale. So we announced recently all of our flowering rooms will be complete by the end of this calendar year, and over the next calendar year we'll hit that full run rate of 50 million grams per year.
Wow.
The second catalyst is going to be pricing. So when we're in a position to compare our pricing versus our peers, we expect that to be favorable, and I think we'll stop treating a square foot as a square foot and a kilo as a kilo and start looking at margin on a SKU by SKU basis. And the third one that's exciting to us is really unveiling our larger strategy about downstream products for the recreational market, building margin, building consumer loyalty. And the hint I'll give you is when you look at the US, 70% of the our market is made by two categories, dried flower and concentrates, and you can expect Supreme and its brands to be a leader in both.
Okay, so you've previously focused on the idea that premium dried flower would outstrip demand for the extracts in your particular market, and do you still feel that you sort of seem to modify that message a bit by including extracts now, or is that something that's always been part of the message?
So we draw a hard line between what we call concentrates and what we call extracts. So concentrates, your shatter, wax, products like that, they're a representation of the flower. In essence, you need really good dried flower to make high-end concentrates. That's what's driving SKU sales in the US, and that's what's driving margin. On the other side of that, you have your extract products, which are really molecule-based, 10 milligrams of THC or CBD. The quality of the flower doesn't matter. Internally, we call them the hot dogs. It's essentially the asses and lips of the cannabis industry.
Asses in the lips, that's a graphic analogy. The idea of these concentrates that are, in case of shadow, running to 90% and above THC, at this point, the regulatory body has no experience with that kind of potency in the world of cannabis, because there's no experience in cannabis. Do you think that those potencies are going to be permitted to continue to be available to the public on a recreational basis?
So I think, in Canada we don't have that experience, but I think if you look to the US markets, whether that's Colorado, California, or any of the other emerging recreational markets, they've found ways to safely educate consumers. Going back to alcohol, we don't take the position that all we can sell is beer and we can't sell spirits. We take the position we need to educate people on the relative risks involved with higher concentration products. So I have confidence that ourselves, our industry association, other producers will be working with the government to ensure those product categories are available, because again, at 20% or more of the market, if we don't bring those consumer goods to the legal industry, we're saving that entire market for the illicit market here in Canada.
Okay, which brings me to the next point, the illicit market. We've still got over 100 dispensaries that are not affiliated or not sanctioned by ACMPR, are not going to be legal, are the illegitimate source of cannabis that has been supplying 100% of the recreational cannabis market since, call it, 1965. Do you think they're just going to pack up and go away as soon as the rules kick in, or do you think that there's going to be potentially a constitutional quagmire in the courts as a result of Canada saying you can grow but you can't?
So fundamentally, we had prohibition for almost 100 years, and it failed miserably its policy objectives. In essence, we had demand for cannabis, and we chose a very restrictive supply-side response. Entrepreneurs, pot dealers, if you will, found a way to supply those Canadian consumers. The same will be true as long as Canadian demand chooses illicit cannabis. The only way we can be successful is to provide Canadians with the quality they want, the price points they want, the range of assortment. So, it doesn't all have to be high-end flower like 7 Acres. There's going to be lower-end product service from other brands as well.
Right.
And only if we can satisfy the consumer demand can we hope to get rid of the illicit supply chain.
All right, John, we're going to leave it there for now. Thanks again for joining us today.
My pleasure. Thank you.